So as a business owner, should you pay yourself salary as an employee or dividends as an owner? Of course, it depends. And one thing that's really important to note is that you really only have this option if your business is incorporated. If you own a proprietorship or partnership or other form of unincorporated business, then you don't have that option to pay yourself dividends or salary. I mean, you could maybe kind of structure it that way, but that's not how it works formally, officially on tax returns and things like that. But it can be that way for corporations. So having corporations just gives you more flexibility and more options in terms of how you pay the owner. And I've heard some people say that they're very much just pro-dividend. They just want to pay themselves dividends and not a salary. And sometimes that makes sense and sometimes it doesn't. There's no right way to do it for everyone. There's no one size fits all. It really depends on the company and the owners and the whole situation and preferences and goals and things like that. So for starters, if you are going to pay yourself as an employee for your corporation, then typically you would need to set up a payroll account and then hire yourself on as an actual employee and then collect deductions like, federal income tax or provincial or state income tax, maybe pension plan deductions, employment insurance deductions, and things like that. And then when you pay yourself out as an employee, that becomes a tax deduction for the corporation. So it becomes an expense. And that reduces the taxable income of the corporation. And then for yourself, the owner, because you're getting paid like an employee, you're gonna have to claim that on your personal income tax that you received employment income. And now there are some benefits to that. So for example, now as an individual, you have an income. So if you're going for a mortgage or a personal loan or something, you can show the lenders that you're actually working and that you have a stable income. On top of that, at least in Canada, if you have that employment income, that's what generates RRSP contribution room. And it also gets you paying into Canada Pension Plan. So those things can be really beneficial because then you're eligible for Canada Pension Plan. Later in life, you're creating RRSP contribution room that you can contribute to for some tax benefits. And again, it makes it a little bit easier for you to apply for personal loans and things like that. Whereas dividends are treated a little bit differently. If you choose to pay yourself as an owner with dividends because you are a shareholder, that's okay too, and there are trade-offs to that. Dividends are treated differently for tax purposes for the corporation. So for starters, it's not counted as a business expense like paying wages through payroll are. Dividends are paid out of the net income from the corporation, so after-tax income. And they're also treated differently for tax purposes for the individual. So if the individual owner is collecting dividends, they're not taxed at the same personal rate, they're taxed a little bit differently. So I think some people think there's just a huge advantage to paying yourself dividends for tax reasons, but it's really not that significant for most situations. And now again, with dividends, if you're paying yourself only dividends, then you're not getting a regular salary. So you might be treated differently for personal loans by lenders. You're not creating that RRSP contribution room. You're not contributing to CPP, at least in Canada. So there are some trade-offs in that sense too, and there are some negatives. But actually you can do both. It doesn't have to be one or the other. So a lot of times, if you're actually working for the company, it would make sense to pay yourself as a salaried employee or just get on the payroll and pay yourself in some form as an employee, but also take out some dividends. So it's not one or the other. And in this case, I think it's typically best to speak with a tax expert, an accountant, to determine what makes most sense for your situation and which method is going to reduce your taxes while still playing by all the rules and not violating any of the tax regulations. So it really does depend. And I think oftentimes it's a combination of both, depending on the type of business, the stage of business, your goals, your preferences, and things like that.